Around the end of 2021, the total foreign exchange reserves held by the Central Bank of the Philippines had hit a record high, reaching about $108 billion. This meant that the country has successfully accumulated billions after billions every single year. As it was only a few years ago, around 2018, the foreign exchange reserves were sitting at around $80 billion. Therefore, it was easy to say that the total international reserves held by the country have gone up significantly in just a few years. A nation's reserves are often determined due to many factors, such as gold reserves, foreign exchange currencies, and foreign investments. However, just a few months later, by the end of September 2022, the Central Bank of the Philippines had announced that the total foreign exchange reserves had shrunken exponentially fast to just $93 billion. Many have cited that the country is now running out of foreign reserves, and some are wondering what is going on. Is the government spending it? Are we missing out on something, or is this normal? Well, these are what we are going to discuss today, the reason why the Philippines' foreign reserves are shrinking. To understand all of these, however, we must first understand how and where the Philippines even get their foreign reserves in the first place, since we need to know what really paved the way for the country to have a load of money. There are many ways for a central bank, or rather for the Philippines, to see an increase in its own balance sheet. For instance, some of the biggest factors contributing to the country are remittances. Remittances are very famous in Philippines. It is when a foreign individual sends money back to their home country, often to their own family. And by doing so, the individual not only helps their own family by feeding them and paying for their needs, but also helps the country's overall gross international reserves. This is one of the most important reasons why overseas Filipino workers are so highly appreciated, because they contribute massively to the economy. Although their contribution is sometimes understated. For instance, the Philippines in 2021 is actually the fourth largest recipient of remittances, reporting a record-breaking $36 billion, almost 10% of the country's annual GDP. The second factor is from the business process outsourcing sector. It is without a doubt that local people know this already. The call center of the country is massive, and the Philippines is known as the world's hub for this particular industry. Therefore, the recipients made from business outsourcing along with foreign businesses opening up call centers have become a massive factor. The third factor is the rising foreign direct investments. The Philippines, while it may not have experienced the same amount of investments compared to its neighbors, the country is still enjoying a net positive inflow, meaning more investors are coming in than those coming out. For the first 7 months of 2022, the net inflow amounted to $5.1 billion, which is likewise also supplying the country's international reserves. The last factor is exports. This is probably the most important factor, since it will also be a part of the reason why the foreign reserves of the country have shrunk in recent months. But before we get to the reason why trade has caused a disruption in its reserves, let us first discuss how exports help increase the total reserves of the Philippines. First of all, the Philippines still has a robust export market, mostly dominated by the electronic and semiconductor industry. When the country exports these products, they go to another country, which simply means someone else out there, outside of the country, is buying the products from the Philippines. These concepts can likewise be applied to the business process outsourcing industry when someone buys a service from the Philippines. Now, let us discuss the most important topic for today's video. Why is the country's total reserves shrinking? Just like how they garnered so much money in the first place, there are also a lot of other factors contributing to the use of the country's reserves. The largest factor, and so we can continue on the export concept, is trade. Trade is simply how a country imports and exports. It is important to know this because the Philippines has a big deficit in its balance. You see, the central bank is forecasting that by the end of 2022, the Philippines would incur a balance of payment deficit of $8.4 billion. The largest reason for this is simply because of the fact that the Philippines is now importing more than they are exporting. The export value is just less than the import value, in other words. But why? Why is the Philippines importing more than it could export? Well, first of all, there are also a lot of factors driving this. For instance, the the international commodity market has risen up in price in the past few months. Crude oil and coal, one of the largest factors contributing to import, have seen their price rise from $40 by the end of 2020 to a high of about $123 by the first month of 2022 for crude oil. Coal is likewise in the same boat, where its price has drastically risen. While international commodity price fluctuations are also playing a key role, another factor also applies: the country's domestic economy. As the world slowly opened up from the COVID-19 pandemic, the demand by consumers rapidly increased. People were, of course, stuck inside and had nothing to do. With the country now open, they are now going place after place, consuming as much as they can. These domestic demands are also likewise reliant on imports, since some of the products consumed locally are bought elsewhere around the globe. The final major factor that decides the path of international reserves is also external debt. External debt is often defined as when a country, such as its government, borrows money abroad. They can do this through the likes of China or Japan, or even through a multilateral lender such as the Asian Development Bank. Like every country globally, the external debt of the Philippines also has to be paid. The way the Philippines can pay them is through these foreign exchange reserves. Hence, why it is so important to also have large dollar reserves, since it will help a country borrow money and pay them down. Now, these are just the largest reasons that we can see. There are, of course, a lot more out there that are driving the entire international reserves. Finally, international reserves play a huge role in any country, not just to pay down its external debt, its import costs, or whatever it may be. International reserves can also play a role in the country's own currency, such as the Philippine peso. These exchanges can be used as a backup fund in the case of currency devaluation. Furthermore, foreign reserves could also protect the stability of a country. For instance, the world today has seen a massive rise in many commodities. The Philippines, which had successfully accumulated a lot of reserves, can limit the impacts of these in its domestic economy. In other words, international reserves are going to safeguard one country from external factors. Now, the last question many would want to hear: is the Philippines at a risk level? With the reserves dropping massively in just a few months and expected to continue to drop, will the probabilities that the Philippines own international reserves deplete? Well, here's the thing about international reserve projections. They are always changing. For instance, the Central Bank of the Philippines executives previously said that the international reserves would breach $120 billion by the end of 2021, but they didn't. Furthermore, they also projected that by the end of 2022 would have $112 billion of reserves, and here we are at nearly $90 billion. So what seems to be the problem? Here's the issue about these projections. They are difficult to forecast. For instance, nobody would have probably imagined that a war in Europe would happen just a few years ago. Only a few would probably have anticipated that the world would have a commodity price surge. There are a lot of unexpected factors that are contributing to the world. Therefore, with so much change happening every day, it is almost impossible to predict what the future would hold. In the case of the Philippines, what we can say for now is that with $93 billion reserves as of the end of September 2022, it's still at the very least adequate, as long as well external factors do not deteriorate drastically. As per many forecasts by other analysts, things will start to look great somewhere between 2023 to 2024. But in the end, everything is still a wait and see. But what do you think? Let us know down below. Thanks for watching.